and I started recording too late. Good morning, everyone. Welcome to Coffee with Carlson. Today is March the 1st. How exciting is that? And guess what? My birthday is this coming Saturday, I think. Can't wait. Birthdays aren't a big deal to me, but they are to my wife. So I'm sure she'll make a big deal out of it. And I appreciate that. Today, I've got an exciting show for you, but I wanted to start off with something I think I'm going to start doing at the beginning of each show. I'm going to try and this says I've been live for 6 minutes and 41 seconds. I don't think that's right. I want to try and highlight some of our customers. I know I try and do that all day. Don't forget, strangely warm coffee. Hope you're having your warm cup this morning. So each show, I'm going to pick one of our customers and just give you a quick shout out to them. Today, I wanted to start by saying my dad started this company back in 1986. So we've been here for a really long time. I also turned a filter on to try and get the fan that's in the background out of the recording. So hopefully that's out. So Dad started the company back in 1986. One of our very first customers who's still with us today, one of my good friends, Tony Bassett at Bassett Electronics. If you need anything from car stereos, boat stereos, side-by-side stereos, motorcycle stereos, RV entertainment system, surround sound, a new head unit for the stereo with backup cameras, security systems, home audio and video, home theater systems, any of that stuff, go see Tony Bassett right across from Chili's out on the highway, off Highway 27. Go see Bassett Electronics, show them some love, tell them you saw us talking about him on Coffee with Carlson. All right, so today I've got something interesting. I told you last week I was going to read a book this week, and I wanted to talk about it. One of my good friends, Sergio, shout out to Serge if you're watching this morning. He's a developer over in Tampa. He suggested that I read a book that he just finished that he found very interesting and wanted to debate some of the topics with me within the book. And I'm going to show you let's see if I can do this real quick. Watch this. Oh, look at me real quick, flipping it over. So the book is The Power of Zero by David Mcknight, and how to get to the 0% tax bracket and transform your retirement. Pretty cool subject if you pick it up. He just recently revised this with the 2018 Tax Act. It's a short read. I listen to books, but I think it's about 150 pages. The total audio book was around 3 hours. So either way you want to do it, it's kind of an interesting read. If you're already retired, there's not a lot of strategies in there for you, but maybe you find it interesting and help your kids or grandkids out with some of them. So that's something you can do. So let's talk about the basics of what David Mcknight is trying to tell you. He's trying to say that income taxes are a graduated tax bracket. So you start at 0, then you get, good morning, Ryan, then you get 10% at the next bracket and on up as you go, marginally. So you're taxed at the lower bracket on the lower amount of income, even if you make $10 million and so on up. There are other things that change that as your income rises. But basically, it's graduated tax system. What David Mcknight wants you to do is start transferring or putting your assets into things that will be used tax-free at such time that you retire. And the 3 strategies that he puts forth. First, he wants you to start off by maximizing your match. If you work for a company that has a 401k match, maximize that, meaning you're only going to put in as much as the company matches. So if they put in 3% of your pay, you put in 3% of your pay. You get 100% return. That's okay. Keep that money there in that. That would be taxable when you retire, but put that money in there. The next thing, once you've maxed that out, then he wants you to start funneling money into Roth IRAs. Roth IRAs give you no current year tax deduction, but they give you tax-free income when you retire, reach retirement age. The other benefit to a Roth IRA is that it doesn't have a required minimum distribution, so you can save some money there. I have several clients, they don't need their IRAs, but they're forced to take them out each year. Luckily, they don't need them. They're forced to take them out each year so that they can pay the tax on them. So that's something that you want to consider. Those limits are relatively low. Say for 2020, those limits were $6,000. So it's not a super large deduction. It is a lot. Generally, when I talk about, people ask me about retirement planning, I start with how much money can you afford to set aside each month or year before we develop which strategy they're going to take. But Roth IRAs have other limitations. They have income limitations. So as your income gets above certain amounts, you are no longer eligible to put money into them. Now, there is a strategy centered around that. They call it I think I said this last week. It's weird when you look at the camera. Look at yourself in the camera, everything's reversed. So if you are above the income limitations to contribute to a Roth IRA, there is the possibility that you could contribute money into a non-deductible traditional IRA and then immediately roll that money over into a Roth IRA. If you do it immediately and you have no other assets in IRA accounts, then that could be a strategy to save you some money as well. I'm going to go ahead and pull that off since you probably already got that name out. So, and again, I want to point out that some of these strategies are simple. Some of them are a little bit more complex. If you need help with them, give us a call, give your financial advisor a call, give your CPA a call to talk about how you can maximize your retirement benefits. The last strategy, which is something that I haven't really thought about too much in the past, and we're doing a little bit more research on it in the background. I did some last week, but I'm doing some more this week to try and get to the bottom of exactly how we want this to work. They call it a life insurance retirement plan, but the basics of it is that it's a whole life insurance plan that has an insurance component and a cash value component. And the idea is that I'm going to, there's no income limitations. Sometimes, good morning, Mrs. Swain. Sometimes there are no contribution limits, but there are, that's the part that we're researching. So I'm going to do a what if with myself just to see how this can maximize. So what David Mcknight says is that he wants you to get one of these life insurance retirement plans where, and I think basically that term is a whole life plan that's centered around retirement planning, not life insurance planning. And there's a big difference there. One is planning for your life after retirement. One is planning for your death after retirement or any time. And what he says, the basic strategy is that you're going to get one of these plans. You're going to buy the smallest amount of life insurance inside the plan as you can. So whatever that amount is, say $100,000. And again, I'm going to get these numbers for maybe to mention as a quick shout out next week. So you want to get that. And then the smallest life insurance component you can, and then maximize as much as you can afford to continue to put into it. So let's say I get a $100,000 life insurance policy. That policy costs me $2,000 a year. And maybe I can afford to put $10,000 in. So I'm going to put $10,000 into the life insurance retirement plan. $2,000 of it is going to go toward the life insurance component, and the other $8,000 will continue to grow tax deferred until such time as I may need the money. Now, the strategy that he talks about is borrowing against the plan. So you would basically be taking distributions out without paying tax on them because they're really technically borrowing on the amount of cash value that you have in it. And then when you pass, the loan will be paid off through the life insurance proceeds. So kind of a workaround to get through, to get away from having to pay tax on that, not having required minimum distributions, not having taxable income. Now, if you don't take the loan component out of it, don't take loans out of it, then it looks like a non-deductible traditional IRA when you pull the money out. And that means, or like an annuity where you're going to be able to pull your principal out without paying tax on it, the amount that you deposited into the account, and only going to pay tax on the earnings that you've accumulated over that period of time on a pro rata basis based on the amount of money that you pulled out at any given time. So kind of an interesting strategy that I hadn't really heard many people talk about. So I'm glad if anyone else has these. It's just like Googling anything else. If you find something and you think it might work for you, then give me a call, shoot me an email or text and let me know. Maybe I'll research it. Maybe we'll both learn something. This could be a strategy that maybe younger people could really take advantage of. If you're close to retirement, it's probably not a good idea for you because the insurance component would be so expensive, and and you're close to retirement age anyway. So you've hopefully maxed out all the other components that you can do. So it's just something that we're going to be researching for you. I'll give you an update on it, maybe spend a whole time talking about the life insurance retirement plan at a later date once I get more details. But for now, I'll leave you with those thoughts. A great book. If you get a chance, go out and check the library, check one of the online retailers, wherever you like to get your books to read. It's a great book. I recommend it. Short read, interesting concepts. But if you're young, it'll actually talk about, and it has some examples and worksheets in the back that'll help you work through your own retirement strategy and how you start planning that. I know my son just started working, a lot of kids his age getting out in the workforce now. It's something that I'm trying to hammer into him. Start saving now when you're 23 years old. By the time you're my age, you could be doing very, very well. So good book. I'm going to try and do that every now and then, just like my soapbox edition. I'll do another one of those in a few weeks, maybe. Maybe I'll talk about the new stimulus plan. I'm not really sure. If you like my videos, please share them. I get shout outs from people around town all the time. If you like them, remember, this isn't Sebring specific. The topics that I talk about are wide and varied and not location specific. So if you like my videos, please check me out over on YouTube, like and share. Like these videos, make a comment. If you have an idea for a future topic, drop it in the comments below. I appreciate everyone that's watching and everyone that watches throughout the week. I'm honored and humbled by you viewing and keeping up with what I do, and I hope you find the topics interesting. Next week, I'm going to go back to a topic related to one of my business clients. I'm going to be meeting with her later this week to talk about it, what they did. And I covered this topic before, but employee independent contractor, that's what I'm going to be talking about next Monday. And I'm going to go a little bit more in depth into that and talk about some of the pros and cons. I'm going to go back and look at the previous video first, though, just to make sure I don't repeat those topics. So thank you for joining me on Coffee with Carlson. My name is Jeff Carlson. I am honored that you joined me this morning. If you need to get in touch with us to come by the office, that was an odd pause. It wasn't technical. That was me. If you need to get in touch with us, please check us out on the web at carlsonaccounting.com. Give us a call, 863-382-4141. We'll find a time slot for you if you need to meet with us in person, virtual, telephone, however you want to do it. We've got strategies for you. Again, I appreciate it. Don't forget to give a shout out to Tony Bassett at Bassett Electronics as well. And we'll look forward to our next week's shout out to one of our customers as well. Good morning, wife. Thank you very much for joining me, and have a fantastic week.